Win rate versus reward risk ratio. Today I want to discuss the minimal requirements for trading profitability. As you can see from this chart, you can have a very good win rate, but still one can end up in the no-go zone, which is basically the loss area. And one can have a very low win rate and still can end up in the profitable zone. The win rate here is basically your trading strategy on which you take a long or short position. But before we dive deeper into the discussion, I would like to welcome you to the channel CryptoPi, the hub for transforming trading using technical analysis and risk management. If trading with technical analysis is something that interests you, then engage with the channel by subscribing, commenting, liking, and sharing. Today, I have taken the asset Ethereum in the Bitcoin pair. Before I start showing you about different technical strategies and how the win rate, you can combine different strategies and increase your win rate, but it won't help unless you decide on how to define your reward and how to define the risk taken against that reward. What we see here in this graph is, let's click on this one so the plots in the background don't show up. What we see here in the graph is a technical strategy with a high win rate. That means every time it gives a long or a short signal, it is a successful signal. If it's 65% and the risk to reward is 1, or in this case reward to risk is 1, one can still end up in the losses zone. This graph is some sort of approximation, but it gives the idea, it gives us the idea that we need to manage our win rate with respect to what this reward risk ratio, or commonly known as RR ratio or risk to reward ratio. If I have a trading strategy which is good, or it gives me successful trades only 50% of the time, I can be in profitable zone with my ratio, RR ratio, to be 1.5. Or if I'm a very advanced trader and I understand the trading mechanisms pretty well, my strategy works quite well, not just the technical signal or technical indicator strategy, but also the risk management strategy works very well, I can go further down the curve where my win rate is 25% and my risk to reward, or RR ratio, or reward to risk ratio, can be 5. And we see this in various interviews where traders, they mention very clearly that if a trade goes against their position, so if they have taken long and they observe that market starts going in the opposite direction, they exit the trade very quickly. They reduce their loss, or they cut off their losses very quickly. And on the other hand, when they see that the trade or the market is going in the position they have taken, then they stay in the trade and they get out, making a very large reward to risk ratio. I would like to discuss or show an example of win rate versus reward risk ratio on Ethereum asset in the Bitcoin pair or in the Bitcoin market. Let's hide the image first and let's do some technical analysis here. Great. So what we see here today in this session is the daily time frame, Ethereum in the Bitcoin pair, and right now it is at 0.248. By looking at this raw chart, one can one can just make some sections that this was the uptrend up until here. Here it was downtrend, some sideways action. But making a trade at any of these sections, any of these parts, can be quite challenging, because at this point one would have not known that the market would reverse and it would stay sideways, almost sideways, up until 2021. So the market stayed for almost starting from May 2021 up until December 2021, or rather over here, if we take it slightly further, until the downtrend begins up until here, November 2022. For such a long duration, one would have not known how to take a trade without a proper risk management. I want to show this by an example of a custom indicator which is built on various concepts of trading, such as ATR, moving averages, momentum, and so on. On the first glance, okay, that's better. On the first glance, what we see here is wherever there is a red trend line, it's a downtrend. And whenever we see the green line, it's an uptrend. And we see here clearly that Ethereum, being an altcoin to Bitcoin, it has been primarily in the red trend, apart from this one run from starting from March 2020 up until, let's say November 2021, so a bit more than 1.5 years. But since then, it has never been able to get back to its all-time high. Such analysis simply explains me where the trend is. Now, I would like to add slightly more finer. So this trend line simply shows me a high level trend, but I will come back to this line trend steps later. And before that, I would like to add one more, is a proper trend line, because I use these bands as stop loss levels. We discussed about stop loss in the last video. Do check it out if you like to know more about what stop loss is, what position size is. All right. Now, what I selected here was XLT trend. That's just the name which I gave. It shows me much more finer trend direction than the stop loss trending. Let's ignore this stop loss line at the moment to avoid the confusion. So stop loss band. What this XLT trend shows is every time the price action has been downwards for a couple of candles, it switches from green to red. Though it does not capture the local highs or the local lows all the time, it definitely gives a proper direction of where the trend is heading. And in assets as such as Ethereum, where we know that for more than 70% of the time the asset is going down against Bitcoin, why not focus on the trades which are short trades for the 70% of the time and long trades only 30% of the time? Anything can change in the future, but historical data, if you look at it, it is trending downwards, with exception of few of the initial years of Ethereum. Right. But again, this one is still a cursor or a high level trend direction. It does not give me a indication. Though one can use an indication of switching every time a red switches to green, it's time to take long, and green switches to red, it's time to take short. But however, we see that in the duration where it is from 2021, June 2021 up until 2022, the switches are pretty often, and this might lead to a lot of false trades. So what can one do? There are numerous indicators, like I mentioned, which has various strategies. I have built so far 5 strategies, and of course I'm testing a few more. And if I switch all of them active, if I activate them, we see that we do not get trade at the local bottoms or exactly at the local tops, but we do get trades intermediate when the trend has already begun. For example, at this point, it indicates to take the long position. Now, if you would remember from the last video, taking a long position would be at the close of the candle, which is here. And let's say I would target 1 to 5. In this case, there's a risk to reward ratio. That is, your risk is 1 and your reward is 5. If you want to know more about position size, do check out the video which is linked at the end of this video or in the description of this video. If I would take a trade here, I would risk, let's say, $10. And if I would win, I would get 1.5 more of the 10 of the dollars. So that would be 15. Now, zooming out, let's remove this one. Zooming out, we see here, same goes for short positions. If I combine all these strategies together, I would be somewhere, let's take this image. I would be somewhere here. That my strategy is win rate. My strategy's win rate is at around 40% or 50%. Some of them are very good with 50%, some of them are good with 40%. And let's say if they are on the lower end, let's keep it at 40%. But what is important is, how do I define my RR ratio? So if it is at 1.5, I would like to have my strategies to be winning 50%. If it is at 40, I would like to have my strategies at 2.0. Combining all the strategies do require some backtesting, but my point here is, take any of the strategies and understand what the asset is doing in the long term. Now, if I have understood that the asset such as Ethereum goes 70% of the time, or approximately 70% of the time, loses its value against Bitcoin, then I would prefer to take short trades much more confidently rather than taking the long trades. And if we see here, only in this one trend starting from 2022, if we would have understood the macroeconomics factor that quantitative tightening has begun, the interest rates are very high, and we would have understood that this is going to impact Ethereum, and we then start focusing on taking short trades, just by a visual inspection, we can already see that taking only short trades would have led us to much more profitable win rate than 40%. let's say it is 50 or 55. If we look at the number of signals which are there, it surely looks that strategy is above 50%. But at 50% already, the strategy is profitable when the RR ratio is 1.5. Such a method definitely makes a huge difference in comparison to blindly investing without knowing or without using any technical indicators or without using any stop loss. In this case, we would have to understand the macro parameter that quantitative easing has begun and altcoins are going to go upwards in the Bitcoin market. And then one can ignore the short signals and focus only on the long trades. Same goes over here. Understanding the long-term trend or how the market will change, one can focus only in one direction and ignore the other direction. Now let's say I do want to focus on both the sides of the direction, both the sides of the trend. How can I do that? That's when we can use the other stop loss band. So what do we see here is, let's take this 70% of downtrend example. I have no clue when or how the price will move upwards here, right? Nobody knows. Nobody has that kind of magician powers. So what do I do at this point? I see that trend has begun. I get a long signal on the daily close. I take my long position. I enter a trade and I take my stop loss all the way to my stop loss band. Now, why do I take it at the green dots? Because that's the safest stop loss margin, which one can decide based on their risk level and how much the price they allow to fluctuate. And I would be targeting at this point to reach at 1.5, which is over here. However, what I see is within a few weeks, my stop loss is hit. But what I understood after getting the stop loss already hitting here, the trend has changed already. And I can switch from taking the long position to short position. Taking my short position over here, my stop loss will be over here. Let's take one of them. This trade got discarded or we lost. If we take a short position over here, the close, my stop loss is over here. My reward I'm targeting for 1.5. Which comes down to this level. Though it would take quite a long time, price action keeps moving within the range of the stop loss, which is defined by this stop loss band. And at one point, the trend goes in the direction of the position and one receives the reward for the taken risk. Let's get rid of this positions. Now this gray bands, what we see here are simply more riskier stop loss. So one can take a long position. Let's take on the same one. And one can decide, all right, I want to be riskier. I would take it at this point and exit the trade very quickly. So the capital is back to your portfolio and the capital can be reused for taking another trade. The further away one is from the entry position, the stop loss, your position size will be changed accordingly. Again, refer to the previous video, but if you already know about position size, you are well aware if the stop loss is far away from the entry point, your position size changes fairly significantly. What else? Yeah, there are other ways of stop loss which I discussed in the last video. Just a short recap. Let's switch off the stop loss band and focusing on the pivot or the swing levels. One does not have to use the stop loss bands. One can easily use one of the swing point indicators. We were over here. We focused on this trade, right? We take position here, and the swing point is marked at this level, and this is already shown because 14 candles has been passed since this swing low. Same goes for taking a short position at around this level, for example, or let's take it this level. If one would have taken here, probably it's not the one which would have indicated because 14 candles are not passed, but somewhere here and slightly a level above. Although here we see that sadly the stop loss is hit, but after that one can re-enter the trade after leaving the 14 candles, which would be, let's say, here, or let's say we enter here again. This will be the stop loss which will be shown from the swing point, but as we have discussed that if there is a swing high which has already crossed above the swing point, it is quite likely that the swing high will be the new stop loss level. So setting the stop loss slightly above is a safer bet as compared to keeping the swing point as the stop loss level. You keep your stop loss slightly above here and set your target to 1.5, 1.2, however one wishes to do that. Alright, that would be all for today's video. If you like the content, I guess we all know what to do, but subscribing, engaging with the channel would definitely be a good motivation to continue doing these videos. Thanks a lot for watching. See you in the next one. Bye bye.